I would request to Mr. Arshad, the chairman of Bahrain ICAP Chapter Management Committee, to start with the welcome note.
Thank you very much. Thank you, Munib, and thanks everybody for joining. We are excited to hear a lot about sort of digital banking and what you guys have been up to also. At the same time, we are recording this session, so there will be a number of participants who are joining now, and then we will be circulating this to our members. And we've got other professionals network also, so we'll be sharing with them as well. So I welcome all of you on behalf of the chapter. We have these chapters are now going to inshallah increase to other chapters collaborating mostly in the Middle East region to begin with. So we will be sharing this and other topics which we have been recording with other participants as well. But I think without taking further time from you, I think I'll pass it on to Irfan, who can just talk us through this wonderful presentation. Thank you.
So thank you so much, Arshad. First of all, ladies and gentlemen, welcome to our webinar of digital-only banking. Thank you for joining us. Thanks for member committee of Bahrain Chapter of ICAP, who provide this opportunity to speak about. Guys, this is Mohammed Irfan. I'm one of two co-founders of NeoSeptual. NeoSeptual is an IT solution and service provider across Europe and Middle East. What we do at NeoSeptual, basically, we are also revolutionizing digital banking space with our end-to-end omni-channel digital banking solution and consulting services. I would proudly mention that we are the only few companies in the region who is working across the unique value proposition, and that is helping our clients in building digital-only banks from scratch, as well as helping incumbent banks in their digital transformation strategy. As we all knew that, big issues around digitalization in banking, what kind of services and products we are offering to our customer today. NeoSeptual is in the mission of helping financial institutions and businesses to become digital first and improves the life of people around the world. So this is our mantra. As we all knew that a lot of happening in digital transformation space from the last couple of years, digital transformation has opened up the financial services market to new kind of providers and business model with great potential and disruption to tackle with. The changing landscape of banking, value chain has become a lot of hot topic around the world recently with neo-banking and challenger banking and open banking initiatives like emerging all other technologies. That's one of the reason they are more focused toward customer-centric approach across the world. I'm not gonna talk much about. I would like to invite Mr. Hasib Qazi, managing partner of NeoSeptual, talk about 1 or 2 minutes, and then we will start. I request everyone kindly mute from your end as this is an audio session. We're recording this session. If you have any question, you can write question in the chat section as well. Thank you so much. Hasib, over to you.
Bismillahirrahmanirrahim. Gentlemen, my name is Hasib Qazi, as Irfan mentioned, I'm a managing partner of NeoSeptual, and this session will be specific to BFSI sector and digital only banking, and hopefully you guys will have a lot of new knowledge in the things which are coming in this region. I will just share a couple of things with you guys. I was recently talking with CITO of Sama in Saudi Arabia. That's the largest market, but I see, which we see that it will be going towards this transformation. They are passing a lot of legislation related with this line of business. However, I must mention that we are into the business of IoT, blockchain, and artificial intelligence-based applied solutions. Our prime target market in Saudi is Saudi Aramco. We are among very few companies who are technology partner with NEOM. in Saudi Arabia with one of the largest system integrator having grade A license from Ministry of Interior, which is very prestigious thing. So Irfan, please proceed. And thank you very much, guys. If you have any questions, like Irfan mentioned, we will be more than delighted to entertain on the chat board or on the email. Thank you.
Thank you so much, Hasib. I would request Jaron, over to you. Please start your presentation. Thank you so much. Please, you can share.
Sure.
I'm stopped sharing.
Perfect. Pleasure to share. If you could share stuff. Yes, perfect. Let me share my screen. Here we go. It should be on your screen now, just to briefly check.
Yes.
Perfect,
Thank you.
perfect. So let me get started. Welcome everyone. Thank you for joining our webinar. I'm delighted to speak to you today about the future of banking. Firstly, let me briefly introduce myself. I'm the founder of Finco. I have a background in strategy consulting and throughout my career always been focused on retail banking and payment innovation. In the past, I worked amongst others with the Boston Consulting Group as expert consultant, worked with InnoPay as payment consultant, and also worked within the strategy team of one of the Dutch banks. And I've been active in fintech for a total of 12 years to date. I'm the founder of Finco, and Finco is a strategy consulting company specialized in fintech. And the core of our work is we help our clients end to end to build and grow digital banks. And in addition, we do a lot of research into the neo-banking space and the future of banking. In that sense, I also welcome you to visit our website and view our publications. We are based in Amsterdam, the Netherlands, and our clients span across the globe with also varied experience in the Middle East. We work for incumbent banks firstly, helping them to innovate their core with digital transformation or helping them to launch greenfield fintech initiatives. Secondly, we help fintech startups to help them establish from the ground up with making core proposition and building that. Next to that, we help them grow in terms of products and markets. And also we work for technology providers such as Move or Fido. Enough about me. Let's move on to the topic today. Today I'd like to share with you my views on the future of banking. If you look at the future of banking, there are various key macro trends that are shaping the future. Firstly, it's about customer behavior. Changing behavior with different expectations on what they expect from banks. They are less loyal / more prone to switching providers than in the old days, more price sensitive. They're more and more digital native and also require services to be on demand. And since the crisis of 10 years ago, also they are much more reluctant or put less trust in the incumbent banks. Secondly, there's a rapid pace of new technological innovations across the board, across industries, and with computing power, the rise of smartphones, big data, all those topics. And in addition to that, also particularly in financial services, there's open banking. Thirdly, there's a big rise of new competition. It's fintechs, big techs, and other new players entering the market, targeting specific customer segments. Third, it's also, or fourth, it's growing regulatory complexity. Since the financial crisis has been a lot of new regulation focusing on business conduct, but also tighter supervision, higher fines for non-conduct, and higher capital requirements. And then if you look into the market itself at the moment, at least in Western markets, very low growth rates, low interest rates, mature markets, and pressure margins, putting players on the ball to focus on lower costs with more efficiency. And then also in Western markets, you see changing demographics, increasingly older population, smaller, younger generation you see elsewhere. And those changing demographics also has an impact on the market. So that's the overall picture of what's happening on a broad level. Today I want to focus on what's happening with new competition, particularly the challenger banks, and what that means for banks. What we've seen in recent years is that there has been a strong growth of fintech challenger banks, or neobanks as they are called. At the left, you see our fintech Finco Challenger Bank Index, where we track hundreds of the largest challenger banks from across the world. We have a tool to measure their customer traction. And what we see is strong and consistent growth since the last 5 years, growing more than 50% over the last 5 years. Nowadays, there are over 250 independent challenger banks, and they amount to over 350 million customers, of which those banks, 60 of those are unicorn banks, meaning they are valued more than $1 billion. And while the neobanks in North America and the UK, the likes of Chime, Revolut, Robinhood, they tend to get the majority of the media attention. But it's not just a UK phenomenon. They have emerged all across the world, across Europe, across Latin America, across Asia with companies like WeBank, Toss, and also in the Middle East with various initiatives such as Masvek or Liv. So you see them growing all across the world. And also these neobanks, they have gained much traction in Western markets that are more mature, more developed. You see those neobanks have grown to a sizable position, amounting to roughly 4% across the board of penetration with consumers. If you look at premature markets or emerging markets like China and India, and to a lesser extent also Brazil, there you see the impact is massive with high penetration rates, making them the dominant players in the banking market and circumventing or making the traditional banks less relevant. If you look at those neobanks, they have grown very fast and quickly secured their place in the markets. And they've done that by offering, in short, modern, low-cost solutions very much tailored to specific underserved segments. If you look at those neobanks, they typically service underpriced, underserved / overpriced segments. And thanks to a very strong focus on a specific niche, they can offer a better proposition than incumbent banks that typically offer a broader range of services, broader range of clients, and they are not able to offer such strong solution for that specific niche. As a result, neobanks, they typically offer a greater customer experience, digital or mobile native, simple, intuitive propositions available anytime, anywhere. And it's not only just the customer experience, it's also that it's much more cost efficient, largely relying on digital processes that reduce or replace manual work, and also very much lighter processing times, much faster turnaround times, with lean organizations operating at much lower levels than incumbent banks. And as a result, thirdly, they're able to drive financial inclusion, better provide access to underserved segments with lower cost and more tailored solutions. The neobanks, they offer a variety of features and services that make them more attractive or make them a better proposition for specific services, for specific niches. Firstly, it's about offering a modern mobile experience with advanced money management features, with a clear financial overview and advanced budgeting tools. Second, it's about competitive pricing. Typically, there are price leaders in the market, and the prices they offer, they're very transparent and clear. And it's not only the pricing, but also often comes with specific loyalty, cashbacks, and other rewards. And next to that, it's also just the accounts management and how you do the banking. You can open your bank account very easily and quick, typically via your mobile, depending on the country. Can be opened within a matter of minutes, as opposed to traditional banks with various steps where you need to go into the branch, and it can be cumbersome. And also your account management is easy and can be all done via your app. If you look at the first wave of neobanks, and like I mentioned, typically they were from the UK, North America, and that got the most attention. And the companies like Revolut, Monzo, or N26 from Germany, and North America players like Chime and Robinhood, and also Nubank, for example, from Latin America. And they've grown to massive scale in very short time. This is one of our benchmarks that we published last year, October. If you look at Nubank and Revolut, they more than doubled already in number of customers. Out of my head, the latest numbers of Revolut, I think 15 million customers, Nubank over 25 million customers, and that in a matter of a few years. So they are definitely strong on getting customers. But if you look at the bottom, what we highlighted there, we made a benchmark on the financials, like a net profit per customer. And there you see that despite having a large number of customers, the first wave of neobanks, they're still struggling to have a sustainable business model and make a profit out of those customers. However, what we see now is that there's a new wave of neobanks emerging that focus on specific niches, and thereby they have a more sustainable, more profitable business model. For example, you can look at Rebanking, which is a digital bank from Argentina. Their core focus is providing FX services, so foreign currency exchange to people in the country. As some of you may know, it's a country where there are a lot of currency exchange limitations. Foreign currency exchange is very important, given the high levels of inflation in the domestic currency. So it's definitely an important market, and by offering a better and more cost-efficient solution than compared to the incumbent banks, they have been able to grow to over 500,000 within 1 year, and they already passed by the break-even point within 1 year of launch. And closer to the Middle East region is Papara from Turkey. They focus on the underserved or underbanked banking population in Turkey, servicing both retail and SME customers with a variety of payment services. And nowadays they have around 4.5 million customers. And it's not only compared to the first wave that we just saw a large number of customers, but they actually have been profitable since their first year of operations. If you look at the neobanks, and to similar level also fintech, other fintechs and big techs, they put the traditional role of banks under pressure. And traditionally, you would have the bank, they offer the front-end customer relationship, they do all the operations in-house, and also manage the balance sheet with finance and risk, and own the customer relationship. Now banks are attacked from both the front end, with big techs coming in between the customer and the bank, taking over the customer relationship. And then neobanks and fintechs alongside banks, taking over market share from the incumbent banks or taking over part of the value chain. With this pressure, banks must take action, because when they don't take, they may risk of having a Kodak moment. Here there are some viewpoints from other consulting companies or market thought leaders. For example, BBVA estimates that 80% of incumbent banks may go out of business. Gardner mentions, highlights that it's not the industry that's disrupted, but it's the product. So banking, in short, will always be there, but how that looks may change, as well as who will provide the services. And BCG highlights it's a fight for being relevant to the consumer and maintaining large scale. And banks face competition both from other banks as well as the new entrants, as we just saw. And if you look at what maybe a future scenario, I don't believe per se in some quotes you see in a market where suddenly there's a big bang and within a blink of an eye, 80% of the banks are out of business. It's more a gradual decline of the industry, what we already see to pretty large scale already happening with banking markets around the world. For example, you can look to European markets like banks in Germany. You may be aware of the situation of Deutsche Bank or Commerzbank that have been struggling for many years already to be profitable or making many losses, many years they make a loss. At best, their return on equity is 2 or 3 percentage points in the last years, thereby not sustainable anymore. And that makes them stuck in a position where in the long term, it's very difficult for them to survive. In order to safeguard their future, there are a few things, generic options that banks have to secure their future. Firstly, what they can do is they can innovate their core. So transforming their existing bank, modernizing their technology, revamping processes, and thereby being more up to date with the demands of today's consumers, as well as being able to meet new competition. Second, what they can do is they can partner with innovators, so external parties where they establish partnerships with, and relying on those partners to offer innovative solutions to the bank's customers. This helps them to insource innovation while it's more difficult to innovate the whole bank. And thirdly, banks can launch a greenfield neobank, what you see also happening across the world at large scale. Thereby, you escape your legacy infrastructure and organizations, and you start with a clean sheet again. Thereby, much easier to have a modern bank without the costly legacy infrastructure in place. So these are generic options that the banks have. And they can use those or take those options either on a standalone basis or often also combined with each other. So this concludes my presentation. I hope I've been able to inform and inspire you with my views of today. If you like to discuss this further with me, feel free to connect with me. Or also I welcome you to visit our website, where we have much more information and publications on the future of banking. Also, in due course, after the presentations, we'll be having a Q&A and also a discussion. So happy to discuss any questions that we may have.
Thank you so much, Jaron. Wonderful. I must admire. I've been around, in banking sector, working around, and what I've seen, FinCog is doing wonders in Europe. They've been doing a lot of initiative in terms of neo banking. So we are proudly partnered with FinCog in the region as well. Thank you so much. Again, the next I request Daniel over to you, talk about sustainability, how sustainability enhances company performance. Over to you, Daniel.
Thank you, Irfan. And let me just start by sharing my screen. And I hope the technology will cooperate. Tell me tell me if you can see my screen.
Yes, we can see your screen.
Okay, let's see. I should go into full screen now. Perfect. All right. Good afternoon, everyone, and thank you for attending this webinar, and also thank you to the team at Neoceptual for giving me the opportunity to speak here today. The subject I'm going to talk about is I guess one that is sustainability, and that is more specifically how sustainability can enhance company performance. And I'm going to talk about four things. I'm going to talk, one, about what is a sustainable company. Number two, what are the benefits of being a sustainable company? Number three, sustainability in the context of financial services and financial services organizations. Financial services organizations have a very, very big role to play, which I will talk more about. And then finally, I'm going to talk about what it is in practice to be a sustainable company. So a lot of people talk about, yes, we need to save the world and we need to be sustainable, but very few of them actually talk about what that means in practice. So what do we actually have to do on a day-to-day, week-to-week, month-by-month basis? Before I get stuck in, I'll just very briefly introduce myself. My name is Daniel Mueller. I'm the co-founder and CEO of Cognium ESG. We are a software and services company based in the UK. We serve organizations all around the world, and specifically what we focus on is we focus on the how. We provide a workflow and automation platform for sustainability management, corporate governance, and compliance that is designed to help organizations with the process of sustainability management and reporting. So let's get stuck in, and let's start talking about what is a sustainable business. And I've started with a quote that I actually don't like, that I don't really agree with, but it serves a point. So Wikipedia will tell you that a sustainable business is a business that has minimal negative impact and maybe positive impact on the environment, community, and society. Well, that may have been a number of years ago, but in the world we live in today, there is an expectation on all businesses that they not only don't have a negative impact, but that they also have a demonstrable, measurable, positive impact on the world. Triple bottom line, what is referred to here is people, planet, and profit. Another way to look at the area of sustainability is it's also often referred to as ESG, environment, social, and governance. So what do we mean when we talk about a sustainable organization? What is being proactive in three areas. Number one, the environment. So we look at company performance as a steward of nature. And every organization has an impact. They have land, they use energy, they use water. And it depends on, and it's slightly different for the different industries. Next is around social. And social is about relationships with all of your different stakeholders, employees, suppliers, customers, investors, capital markets, regulators, and governments. How are you interacting with them, and are you interacting with them in a positive way? And finally, it's around governance, and it's around how the organization is governed, how it is led, and really how it manages itself in terms of accounting, conflict of interest, and other areas. And so everyone will agree, you know, and everyone will say, well, we want to make the world a better place. We want it to be better for our children, and we want to help the environment as opposed to hurt the environment. But when you are an organization, there are very specific benefits that you derive from having good ESG and sustainability practices. And when we talk about, you know, how sustainability enhances company performance, it enhances it in a really from the ground up. Number one, you get a much better understanding of the risks and opportunities. Number two, you are able to streamline processes, reduce your cost base, and improve the efficiency of the organization. And it doesn't matter whether you're an oil and gas company or a mining company or a bank or an insurance company or a telecommunications company. You derive a lot of competitive advantage from being aware of your sustainability and ESG impacts and risks. Next, you also improve your revenue and reputation. Your customers have a better perception of you. Investors view you as being a lower risk. Once you start paying attention, your sustainability performance will improve, because just by paying attention, you will see that you will start doing better. Your overall financial and reputational risk will be reduced. And perhaps most importantly, you will engage and align with your stakeholders. You know what they're thinking. You will understand what is the issues that are important to them, and that just makes it so much easier to run your business. There are specific internal and external benefits that you derive from having good sustainability practices and for being a good corporate citizen. And as I mentioned, it's everything from sort of operational efficiencies to having a more robust strategy, to being able to demonstrate to your stakeholders and also your competitors how you are taking sustainability seriously. But the bottom line in all of this, and the question I get asked by organizations over and over and over again, is, you know, why? Why should I spend money to basically, you know, start worrying about my sustainability impacts and my sustainability risks? And put to one side that in some countries it's already mandatory, and it will continue to be to become mandatory in other countries. Put to one side the fact that it is the right thing to do, because it's the right thing to do for the planet, for your children, for your grandchildren. The bottom line is that sustainable businesses make more money. And this has been proven over many years through various reports and through various research initiatives, that if an organization is very good at, and again, I always compare this to financial performance and financial reporting. Organizations have been measuring their financial performance since, you know, since you had market traders in, you know, in ancient countries. And so organizations are very good at managing their financial performance. They are much less good at managing their non-financial performance. And that's really what sustainability is. And the bottom line is if an organization takes the time and the attention to focus on their non-financial performance, they will simply, at the end of the day, make more money. And this is what I call the happy coincidence of sustainability. It just so happens that the behavior, the right kind of behavior, is aligned with making more money. But you know what? Don't for it. Take the word of Larry Fink, who is the CEO of BlackRock, the largest private equity firm in the world. And in his most recent letter to CEOs, I pulled two quotes out of it. A company cannot achieve long-term profits without embracing purpose and considering the needs of a broad range of stakeholders. Very simply put, is your financial, is your investors as a company. You're not doing a good enough job. Most importantly is what he goes on to say, and he says it, in my view, in a very politically correct way, but I think you can read through the lines. He says, we will be increasingly disposed to vote against management and board of directors when companies are not making sufficient progress on sustainability-related disclosures and the business practices and plans underlying them. What he's basically saying is you want to get any more money unless you are able to that you are taking sustainability seriously. And for me, what is particularly interesting, when I think about the financial services sector, the banking sector, is the fact that when it comes to sustainability, banks naturally have an edge. And more so, digital banks have an even greater edge. Because, and it's in two ways. One, the operations of a financial institution are inherently sustainable. Automation is a big part of it, paperless is a big part of it, and efficiencies is a big part of it. But also, the products and services of banks and insurance companies promote sustainable practices. Universal access promotes financial inclusion, which is a big driver, as you're well aware, of digital banks. Digital payments promote transparency, which in all parts of the world is an issue. Having an audit trail and having proper governance basically helps with anti-money laundering. And so when I look at financial institutions, they actually have a double impact when it comes to sustainability. Number one, they are an institution in their own right. They have an impact. They should measure their impact. They should try and reduce the negative, increase the positive. And most financial institutions do that. But the second part of their impact has to do with the fact that these institutions, financial institutions, they allocate capital. And every capital allocation that is made by a financial institution is a decision about the future of the world. And this is, I think, what is at the root of what BlackRock have been saying. Every investment, every project that gets financed, every purchase hire agreement that gets made is a decision, whether you think about it that way or not, is a decision about the future. And because, and again, financial institutions are in a really unique position, because just about every activity that goes on in the world flows through a financial institution. You know, whether you're financing a big dam to provide hydroelectricity, whether you're taking payments for a small local shop to sell its goods. And so, to me, double the impact means double the responsibility. Let's finish now by talking briefly about, you know, so great, you want to do something, the organization wants to improve their performance. What does that mean in practice? What do you do? Well, like most things, you start by defining objectives, and depending on the industry, depending on what you do, different themes will be more relevant. Second is execution. Then you actually have to educate your organization and your staff. And you actually, you do day to day, week to week, month to month, you have to actually put your money where your mouth is, as they say. And then finally, you communicate that to your stakeholders. And different stakeholders have different needs, as we know. And it's about knowing how to manage that communication that's extremely important. And so, to me, the best place to start is always to look at the UN Sustainable Development Goals, which you're probably all aware of. Most governments report to the UN. And any organization can pull out at least 4 or 5 goals that are relevant to what they do. And in fact, with financial institutions, they're all relevant, because they're relevant either through what the organization itself is doing or through what the organization is financing. And again, in practice, what you need to do as an organization is you need to define a process where you, once you figure out what are the areas that you're going to focus on, you make use of the resources in your organization to assign responsibility, to track progress, to collect and store data, both qualitative, both quantitative and qualitative data, which is how sustainability differs from financial management, measure and improve performance against targets, and finally, report. So, you know, good intentions are the beginning, but you always need to back them up by the how, by what you do sort of day to day. And really, I've come now to the end, and I hope I've given you some flavor of, well, you know, how big the responsibility of the financial sector is when it comes to sustainability. Also giving you an idea of, you know, in practice, what you need to do if you want to start making an impact. And I would be very happy to answer any questions during the Q&A. Thank you very, very much.
Thank you so much. Thank you so much, Daniel. Yeah, so I request Ehsan to over to you. Please proceed. Thank you so much.
Okay, thank you, Irfan. So before we start, let me introduce myself. My name is Hassan Malik, and I started my career in 2003 with PwC Pakistan, and qualified in 2007, and then get an opportunity to work in Pakistan and in GCC countries, especially in Saudi and Qatar. Core expertise that I have are the areas where I have worked so far. They are the ERP implementation, solution architecting, business transformations, and audit and the bookkeeping. As you know, being a chartered accountant, everybody has the same thing. Currently, I am working as a Chief Consulting Officer in Axiom World Private Limited. Axiom World was founded in 2014, and now it has its 4 regional offices in Australia, Ireland, and Pakistan. Axiom World basically is a company who is helping its client for the digital transformation in as far as ERP system are concerned. We specialized in Oracle products like Oracle e-business, Oracle Fusion, NetSuite, and then we have some industry-specific in-house solution, which includes the real estate, building management, manufacturing, project constructions, and so many other products. So these are all internally built and the cloud-based solution which we are offering right now to these different customers. So far, my main clientele of the Axiom Wood is we have National Container Terminal in Saudi, we have Al Tajaria Group of Real Estate in Pakistan, in Kuwait, in Pakistan, Sapphire, Zameen.com, AWP, and similarly some major clients we are working with who are using our product. Now I would like to start a panel discussion with our members. First of all, again, as I said, thank you very much for your time and for such a valuable information. So I would start with Irfan. Irfan, you have been working in GCC for a long time, and like you have been working in GCC, and you have also exposure of the European market. What do you think? What are the main challenges that the GCC market is currently facing with respect to the banking sector or financial institutions?
Right. Thank you so much. Ehsan, thank you for asking the question. I think unlike the other sectors, the current banking system hasn't really seen the transformation that the other sector have been, unlike the logistics, which has been completely democratized with the entrance of the likes of Uber and Kareem. What we have seen so far and what ended up happening is you get a democratization and personalization of that service in the banking domain. But with the current banking, as much as I would like to say it's a problem, but I prefer using saying it's an opportunity as well. And I think the lack of impersonalization that currently experienced in the banking world is somehow an opportunity for players as well. What we have seen in the region, the banking world is going beyond now, talking more about personalization, customer-centric approach in the banking domain. What we have seen, the banking world still very much is as one size fits for all. And you still have the creation of one credit card that fits all of your customers. You still have one or two mortgage setups that basically help everyone. And there is ultimately the lack of impersonalization as far as experiences are concerned. And I think that's due to a lot of fragmentation of data across a lot of data points and legacy infrastructure that exist in the current banking and the legacy traditional banks. That is where I see the biggest opportunity in the banking world, where if you really want to compete with challenger banking space or near banking space, you need to update your legacy part of it. And I think where world is going, where Europe is heading, Middle East still is struggling and paying the move towards that. But in the end of the day, if you really want to survive, you need to compete with the challenger banking space, and you want to be more customer centric. This is what my opinion on this.
Okay, great, thank you. So if I continue with you on the same question, so then how will you define a true sustainable business model for the digital banking in this case?
Right. So I think a true sustainable digital banking business model for me is actually the bank optimizes its customer interaction, products, processes, you could say, and even though data around digital technologies. Because if you see, I would say data is a new oil, where if you really want to take leverage or use of right data, make sure banks are digital efficient on the back end and the front end processes as well, where there is technologies like of automation, which really help banks to automate. I believe the use of digital and digital technologies may lower the cost to serve the customer as well. At the same time, these technologies are also enhancing the higher touch services as well. And I think that's if we are heading towards that kind of approach and model, that would really embrace and help traditional banks to compete with neo-banking space.
Okay. Thank you, Pan. My next question would be from the JRN. As we noted that financial services landscape is swiftly changing, do you think that it is due to overall macroeconomic changes, or rather, I can say it's only just finance specific?
It's a good question, and it's a combination of both, I would say. Firstly, there are some strong macro trends driving also the change in the financial services sector. So firstly, there's innovation in technology, technological advances, rise of smartphone that we've seen in the last 15 years, increasing computing power, data analytics capabilities growing. And that's something that you do not only see in financial services, but more general across industries. And second, and related to that, also you see a change in consumer behavior, which is to a large extent driven from user experience or services from outside the financial services industry. For example, consumers nowadays, they are used to Netflix. They can watch Netflix anytime, anywhere, very easy to use on their mobile. Or things like Uber, Booking.com, all these sort of modern facilities that are available on the phone. And that sort of raises the bar also for financial services companies. Then what is specific is the specific perception of consumers to banks related to the financial crisis. At least what we've seen in the West Europe and North America, where many banks needed to be bailed out, that significantly lowered the trust that consumers have in banks, and still nowadays hurts the banks. Also, what you see specifically in financial services are regulatory changes, growing regulatory complexity since the last crisis, new regulation around open banking. So it's in long story short, it's a combination of both macro trends together with specific financial services trends.
Okay, thank you, Amajan. It was a quite interesting answer. So, Daniel, as you spoke on the sustainability and all that, while corporation being more responsible towards the society, and during the past few years, we have a new concept has been evolved, which is called corporate social responsibility, or CSR. The goal is to serve consumer and communities at its best way. So, where did you see the role of fintech or bank in CSR, and why it's important for them to consider?
Well, so I mean, it's an interesting question, and I think there is an opportunity now. There is an opportunity now. The COVID crisis has, with obviously as horrible as it is, I think has delivered a tremendous opportunity to the financial sector because of the difficulties consumers and small businesses, all businesses are having now. I think financial institutions have an opportunity to demonstrate a leadership position when we start coming out of the COVID crisis. And corporate social responsibility, which is an integral part. It's the corporate social responsibility is the S in ESG. It's an integral part of sustainability and of an organization behaving in a sustainable way. And I think whereas it was important before the COVID crisis, and organizations, as I mentioned, who did it well were rewarded both financially and by their customers. I think as we come out of the COVID crisis, there's a real opportunity for through CSR for financial institutions to really demonstrate to their customers, and as Heroin just said, they lost faith during the last crisis. This is an opportunity for them, I think, to get some of that faith back as we come out of this crisis.
So my next question would be from both of you, Jaren and Daniel, because once at one end we are talking about the neo-banking and advanced banking technologies, and on the other side we're talking about the sustainabilities or the CSR. So how we can balance between them, because if I being a layman, I can see that with the advanced technologies and with the neo-banking, the number of the jobs or the people, the social responsibility is going to be a sort of compromise. So how we can, if we keep the both and integrated, how that will work?
Sure, Daniel, you want to answer first?
Sure, I'll take a start. So, so number one, you know, the link specifically. So what we do is, as I mentioned earlier, is we have a workflow and automation platform, and this platform actually fits into the digital transformation work that an organization would be doing. So in practice, in terms of the day-to-day, you know, one of the things that has been happening and that continues to be the case is most organizations, they do their sustainability management and reporting manually. And what we do is part of a broader digital transformation. So that's one part. The second part is, there's no question that with our platform and other digital transformation technologies, you may need less people, and our approach is one of efficiency. The idea isn't to say, well, if you use this platform, you can get rid of 20% of the people. The underlying idea has to be that you become more efficient. And by becoming more efficient, you can accomplish more. You can serve more customers, you can improve your sustainability impact, and you can provide more services to your clients. Karen, go ahead.
Yeah, sure. Let me also take a step on it, and I'm not sure if that will answer your question, but let me give an alternative view more from the customer point of view. As you noted from my presentation, I really think the customer perspective, the customer behavior and their needs form well, basically the starting point for modern neobanks. And to be successful, you should tailor your proposition towards those customers. And what you see is that obviously due to what's happening in the world, also you see consumers putting more and more importance to CSR, to sustainability, and not just from the outside or just a reporting side. You've done something good as well, but more like the core of what you're doing. I believe in sustainable business models where firstly you do something what's good for your customer, you add value to them, and CSR is a big part of that. And to be able to survive or be able to continue to meet customer needs, banks need to also follow the customer needs in this sense, follow the market, because otherwise they're also less relevant in the future.
Okay, great, thank you. So, Irfan, having said all these things, do you think the data has become most important commodity left for the traditional banking to compete with the digital, whereby the challenger banks are still in the race of acquiring more bank customers and the data? So how would you explain that?
Right, it's very interesting question. I came across many times with the same question. Well, no doubt it's commonly recognized, and we heard a lot about that the digital revolution sweeping the financial sector, and it's serious threat to traditional banks. And what is often overlooked is that as an incumbents, large banks have certain advantages that their smaller rivals do not possess right now. So arguably the biggest advantage is that of data. Traditional banks still have always held vast amounts of data inside their organization. But in the end of the day, it's their ability to interpret and extract value from this commodity is something have historically the traditional banks and the legacy banks are struggling with this. And I think on the other hand, if you talk about the digital only banks or the neobanks, and I think they probably still more agile when talk about data. they knew they come up with modern data platforms, and probably they're using data as a trump card for them to acquire more customer and even faster than traditional banks. I think they operate with a solid commitment to work around changing customer needs and expectation. And this is what we have seen. Digital only banks are more centric. And yes, well, we have seen some of the banks, even though across the world and region as well, there is few traditional banks, legacy bank, they come up with the digital only banking proposition. And I think if they could use data and come up with the best approach, they will use that and serve the customer well, and even though compete with the rest of the competition.
Okay, so that means data is still it can be used. So I would like to take a question from the audience. It's from the Saeed Batsab, and it would be to use Jaren. He's asking, the new banking is targeting only consumer or the corporate clients also. Is there any example of the neo banking for the trade financing? And it was my question also, that so far we are talking about neo banking for the consumer, or the example that you have shown in your presentation, they were all the retail banking. So how would the corporates or the large entities will be beneficial for it, or it's just?
Yes, no, it's a good question and good to clarify. So you're right. Basically, all neobanks, they target either consumers, so retail customers, private individuals, and secondly, also SME customers and business customers. And then what you see emerging is potentially on the retail side is more the mass affluent, so wealth management. On the corporate side, it's either business accounts and very specific services. You can think of business lending, peer-to-peer lending that's also happening in the region. Other capabilities around foreign currency exchange, about cash management. You see those features, but as you move up to more and more larger corporates, firstly they become those fintechs. They become not per se or complete banks, but more specific products. So a lending product, an FX product, cash management product. And then if you go even more up the chain to larger organizations, it really becomes not front-end solutions, but more back-end capabilities that they provide. It's more in the area of RegTech, for example, where there are solutions that simplify trade finance, either provided to the bank or in partnership with the bank. So it's not per se that the whole value chain is being disrupted, but it's more that various key components in trade financing are replaced by fintech solutions that make the whole process more efficient.
Okay, great. I hope, Saeed, you got your answer. Excuse me. Daniel, do you think that it's essential for the weaving digitalization and sustainability together to realize the full potential of the banking sector and the financial system in contributing to the SDGs?
Sorry, I didn't hear the middle part of the question. Could you repeat it, please?
Okay, I was asking that, do you think that it is essential for weaving digitalization and sustainability together?
Yes, I think they go hand in hand. And I think they go hand in hand for two reasons. One is a bank's activities sort of naturally lend themselves to be digitized because a lot of the processes have been and continue to be digitized. I think that sustainability as a sort of sustainability management is an area is an area that benefits greatly from automation, full automation and partial automation of processes. And you know, I think that a lot of the disciplines that are found in banks around auditing and governance, again, give the bank, I think, an advantage over other types of organizations when it comes to taking advantage of digitization and sustainability as a way of deriving the most benefit for their stakeholders, for their customers, for all of the stakeholders that they serve. And the other reality is, and this is a general comment about competition, is if you don't cannibalize your own business, someone else is going to come and do it. And it's better, even if you're an incumbent bank, if you know change is coming, it's always better for you to cannibalize your own business than for a third party to come along and do it.
Okay, great. Though the time is over, but the topic is so interesting, I would like to extend it for a couple of, let's say 5 to 10 minutes, if everybody is okay.
Yeah, it's fine.
Okay.
Sure.
So there's another question coming from Hassan Khan. If it's not Hassan or Hassan, my apology if I'm pronouncing it wrong. How a bank can mitigate the risk of the money laundering by adopting more sophisticated digital banking solution? So the question I may add another part, like the companies in Pakistan and other companies, countries in like Pakistan and other where this money laundering is a big threat. Do you think that with the neo banking, will that risk be covered, or it's going to increase? Darren, I would like you to answer that.
Sure, happy to answer. So obviously, all the regulatory compliance, anti-money laundering, preventing financial crime, terrorist fines, all those topics, they are big issues, obviously, and criminals or people who have the wrong intentions always are one step ahead of the game. And next to that, also what you see, banks face ever increasing regulatory compliance burden from the regulator, with even higher fines when they don't comply. I believe that fintech provides the opportunity to make your compliance functions much more efficient. There's a lot of manual work still in all this compliancy of checking specific payments, see whether it's fraudulent or not. If you use the right solutions, you can automate a very large extent of the work. Either use fewer people, or only use the people for where it's most valuable to really check the right things, as opposed to just doing manual work for the administration. And ideally do both, achieve better quality of screening with fewer people. So I see that fintech is an opportunity to do that.
Okay,
And
great.
if you allow me, Visan, I wanted to add something on this part. No doubt about that, technology is serving, big time. Whatever problem which we've been facing and we are facing, technology would serve them better enough. So what we have seen in that, lots of technologies, like as Jaren mentioned, automation, when we talk about artificial intelligence, machine learning, and big data. So you can use those technologies and ability to identify the patterns of, even though transactions, behaviors, and anomalies, rapidly allowing compliance professionals to better spend their efforts and understand the issues which they are facing in terms of money laundering and all. And well, there is heck of software now and lots of players in the market who are offering very great digital banking solution who is catering this issue of money laundering. And one of the thing which I probably would like to mention, Daniel mentioned that Daniel offer a sustainability platform where there is a kind of proposition which even though Daniel is also working on anti-money laundering. So he's serving the customer if a customer needs to do sustainability reporting or a non-financial reporting. So they're using that platform to automate that job. And same goes for anti-money laundering. So I, even though, want that Daniel could even talk about a bit of anti-money laundering point of view. It's really interesting topic. And Daniel is also offering an amazing platform on that space.
So yeah, Irfan, thank you. So
I have another question, and I want you to answer both
Sure.
the same. Okay. So like we were discussing, and we are all currently focusing on the digital banking and the banking from the consumer side. But we haven't spoke anything like this is from the money laundering topic. Do you think that at the same time we should be offering something to the governments or the authorities to have a cross check on that with your sustainability approach?
Well, the short answer is yes. The slightly longer answer is, when it comes to things like sustainability, and I'll define it slightly more broadly. And so the challenge many organizations face with sustainability is not that different to the challenges they face when it comes to anti-money laundering. And by that I mean, number one, it requires a lot of manual effort. There is a lot of there are a lot of people and processes to keep track of. The information that you need is not centralized. It's spread throughout the whole organization. And that makes it complex. And finally, the two final points are, one, it's difficult because, and again, I'm not going to talk about sustainability. AML, I know it's a bit tighter, but in sustainability, you have multiple frameworks. And those frameworks are evolving. And it's difficult for organizations to keep track of this. And finally, in any process like that, it's difficult to maintain a high level of governance. And that's why sort of the approach we took was, you start with a framework. So in addition to the sustainability, something we also launched recently is our platform now also supports Sharia governance. So, and again, I use it as a parallel, depending on the type of transaction. So let's use Ijara as an example. We have within the platform the whole description of the Ijara transaction with the steps, with documents, relevant documents for each step. And we give you the ability to link evidence, and we maintain an audit trail for governance purposes. And so we believe that this is the right approach for sustainability, that it's the right approach for Sharia governance as well. And because AML shares a number of characteristics, as I mentioned earlier, in terms of the obstacles, I think AML activities can be greatly enhanced using the same approach.
Okay, great. So in the nutshell, we are hoping that government also, or the legislative authorities also needs to follow this sustainability. It's not only the corporate who is working on that. So I have two more questions, rather three more questions, two from the audience, and it looks like the questions are same. So Mr. Munib and Mr. Aslan, I'm merging your question. The question is that how we foresee whether digital banking will take over the traditional banking in the near future, or they will work side by side. And the second part would be, in that case, what would be the desired state for the bankers where they want to reach? I guess, Jaren, you may be answering this
Yeah,
one.
sure. Now, happy to share my views. It's partly related to what I already shared in my presentation around the penetration of neobanks or digital banks. What you see in markets where there's already good existing banking infrastructure, neobanks come in to offer something different and better. And what they are doing is they are raising the bar for incumbent banks, while they are also taking a sizable market share, typically between 5 to 10%. And that's across the board. If you look in specific niches where it's less developed, neobanks or digital banks are really taking over the incumbent banks in that space and really taking much higher shares. As you have seen in more emerging markets, they become the digital or the dominant players in the market, the digital banks, taking over incumbent banks. So to answer the question, will they take over or work side by side? I feel there's a place for both parties. But incumbent banks need to follow suit with the benchmark the digital banks are making, and offer a similar digital experience. Otherwise, digital banks will take over.
Okay, thank you. One last question from the Irfan, because and I think that's the most important one, because we're talking about everything but not the technologies. So what do you think, what are the key technologies trends that will be shaping digital banking in future?
Thank you. I think everyone heard a lot of buzzwords around technologies. I think in the past few years, banks realized to embrace emerging technologies and become more flexible to even adopt evolving business models as well. And they're putting emphasis on customer-centric approach, and that's reality. Talking about technologies, of course, including talking about blockchain, which is distributed ledger technology, artificial intelligence, big data are driven by increasing demand of hyper personalization from, you could say, a digital savvy millennials, as well as the rise of platformization, give us a sense that there is few technologies which is really, you could say, talking about the retail banking side of incumbent banks. So I'm talking about ground realities. KSA, Kingdom of Saudi Arabia, they have recently, I was listening one webinar of CITO of SAMA. So he was mentioning that there is a huge push towards technologies, cloud strategy, and some other initiative like so open banking you could see in the region. Of course, Bahrain adopted very well, and we have seen there is a bank, first digital only bank launch here. So of course, the technologies, as I mentioned, blockchain, artificial intelligence, then you could say machine learning, automation, talking about back-end automation, front-end automation, robotic process automation. And of course, one of the things which I would like to mention, of course, if you see before coronavirus, the 2020 were already being framed as the decade of digital transformation. Such changes probably reflect a mounting hunger for must-have innovation, including hyper-personalization and user experience. So we acknowledge the fact that digitalization is definitely changing how people interact with the business on a day-to-day basis, and of course the advancement. And if incumbent banks they wanted to exist or compete, so probably they need to look after this technology, and they are looking after. And there is a huge transformation going on in the retail side of it, where when you see, and corporate side of it, a lot of banks they do not have leverage to, you could say, they do not have any other option, so technology is something which left with them. If they really want to use the right strategy and the right technology to compete, and that's the way forward. And those are the technologies. Some of the technologies are complementing the financial services a lot.
Thank you. Thank you very much. So, thank you very much, Irfan, Jaren, Daniel, for having such a wonderful discussion. I guess there is no more question from the audience also. Irfan, I would like you to share your closing remarks.
Sure. First of all, thank you so much, everyone, for joining this webinar. Thanks to Management Committee of ICAP, Mr. Said Bhatt, Arshad Gadit, Mr. Munib, and sorry if I missed anyone else, but thanks a lot for providing us a platform to talk about challenger banking space or digital banking, where where it's heading. We can write our details in the chat section as well. If you have any question, please contact us. Please contact Jaren, Daniel, even Mr. Said will share all of their details. If you have any question, please separately email. We are happy to answer. If you're looking for a strategy how to transform, we are here to serve. As I mentioned in the start of my presentation, we are proudly mentioned that we are the only few companies in the region talking about digital only banking proposition. And we're not only talking about, we did some job in the past. And thanks to partners, Daniel Mueller, CEO of Cognium, is fabulous. Jaren, thank you so much for giving your time. Again, of course, we will happy to have more webinar on different topics, and we are here to serve. And in the last, I would again thanks everyone for joining this. Thank you, Mr. Hasib, managing partner, Neoceptual as well. So thank you again, guys.
Likewise, pleasure.
Great.